The S&P 500, the Nasdaq 100, happy Sunday. We're not going to waste too much time here. We need to be going over some core fundamentals and some technicals, supply and demand and everything in between. Let's get to it. Now, I do want to start with the big guns on the day, if you will, no pun intended. We're going to start with what's happening with the Chinese balloon, something or another. Now, a lot of my viewers may say that this is just propaganda. It's this, it's that. All I know is that we were moving pretty well on Friday, and then once the media started attacking this subject, it definitely caused some uncertainty in the market, and I believe it just kind of shifted the tone. Now, we do have a follow-up from this, and China literally said they reserve the right for further reaction, possibly show off their left nut to say we have, a bigger you-know-what than you, America. I don't know, but either way, this is kind of like Fugazi, if you will, but we still need to pay attention to it, and we need to see kind of what happens going into Monday from this. Economic calendar, we've already kind of gone over all of that. We are going to be doing the whiteboard today, so going over what's happening with data and how we've kind of been progressing, so make sure you stay tuned. Supply and demand, and the first thing you know here is our demand levels very clear. Right now, they're at the 12.5 level on Nasdaq. Major bullet point 12.1 is your next big one when it comes to Nasdaq. Also, we're going to go into exactly how I'll be trading that and what I'll be looking for in the market to take, the big winners like we have had from this past week. But before we go too deep in anything, I have to ask you to do two or consider doing two things: like and subscribe. Every single day I make these videos for you so you are prepared, unbiased, win, lose, draw, showing you the plays that I'm looking for every single day, absolutely free. So make sure you're tapped in and have those notifications turned on. I recommend following on Twitter so you can get all the chart updates as well. As you can see, constantly giving you updates. This is just over the past 24 hours. And then, of course, last but not least, right now, again, we have the half price Discord at $30 a month. The only catch is you will not be able to type in Discord or access the voice chat. However, we are starting the webinars and education aspect of the channel very soon. And so if you do get into this while the first 100 spots are there, and this is all that will ever be there, you will have access to those free webinars and some of the education stuff we will be implementing very soon. So make sure you tap in there. Let's get to the video. Now, when we look at what's happening here, I want to go over a broad viewpoint. I cover the charts almost every day, and I think some people, I get it. They're very helpful, and I'm going to keep doing that. Monday through Friday, it's the focus. Now, today, again, I gave you the demand levels off rip. There's not too much we need to talk about here, right? Even when we come back to SPY, on SPY, it's kind of less so. We just had that 410 level, which we're watching. After that, I think you have to anticipate probably down to 403, 404, which was that major, first level we were looking to test. So that's where we're at right now. I don't think there's a need to heavily cover this right now. You can watch Friday's video. I went a lot into that. Now, when we dive into this, I also want to talk about TLT and some of the other factors going on here. TLT, somewhat of a double top, but I want to show you here what's happening. It's almost like an ascending triangle. You've made higher lows here. The market's looking healthier and healthier. You're getting a clear resistance at 109.5, and then you got a little bit of a sell-off on Friday, but we need to go into a little bit more of what's happening there. So these are just areas that I'm looking at right now. And so people are saying, well, TLT and bonds, they're pointing to more downside. In my opinion, I don't think they're there yet. Again, something I would be watching is like the 10 and 30 year. If those can continue to make higher highs and show continuation, then yes. But we've seen this story already basically going in all of January, but really since November. We saw that push down, we see some volatility, and then there's no follow through when we drop back down. That's why when we broke below 4%, it was kind of tough when we looked at the yields, right? We tracked them a lot, but we've tracked them a lot less in recent memory, right? So when we look at the 30 year, you're already seeing a little bit of that slowdown there. So I think yields, you have to let them marinate. You can't just say, oh, well, we have an update on yields. It's pointing for downside of the market. No, you can't really do that. The DXY, you are getting a bounce out of this area. We've been talking about this for a long time. What do we keep saying? The 101 level is as important as the 109 level. In between this, there hasn't been too much continuity between, indexes and the dollar, right? Because realistically, when the dollar is dropping, you expect a risk on mentality because people don't want to have their money in dollars. They want to have them in equities to kind of play off what's happening with the dollar. Well, obviously right now the dollar's been dropping since November. the market hasn't necessarily been going up since then. If we look at the SPY, right? So, during November, we kind of went up. We came back down December and the beginning of January, and then we kind of went back up here on SPY. Nasdaq looks better overall. Now, the last one I do want to point out before we start going into, heavy things here is the VIX. People also pointing out, again, if you don't understand what moves the VIX and what drives VIX, specifically options in the derivatives market, then it's probably not too helpful for you to focus on. But if we're looking here at the VIX, we came back to that level. This is what we talked about. We're like, look, if you start getting below 1920, your next level is 16 to 15, right? And that's that big level that we had all through 2021, which was very reliable. So we're getting into that area, very interesting, but you did get a bounce, so we're kind of like in this area of limbo. But what's important is look at with option contracts on the SPY, SPX, and indexes specifically. Those big short and big put positions, they've been rolling them out further out. So if they were from March, they're rolling them out to June, possibly July and further out. So there's no real reason to be heavily short for a lot of these big names as of right now, but we'll get into what will set up that short opportunity, okay? So these are things we need to visualize. And to give you a better perspective on that of why there isn't necessarily the greatest opportunity to short right now, and you're getting into you're getting into that opportunity very quick. But if we look here, giving you a visual of where Apple was, for instance, before this bounce, right? So everyone was heavy, and I was one of the guys that was still pointing at more downside, right? But then we broke, pre-local highs, and then we saw continuation, and then the stars kind of aligned there. Now, if we look at what happened, when those, in the beginning of January specifically, when people were hammering shorts, me being one of them, right? You were really low. Like, for instance, on Apple, when's the last time we've seen a drop from 183 down to 120, right? We're looking at a 30% drop in Apple. When's the last time we've really had that type of drop? I mean, you can go back to COVID, but besides that, it was, you had this 118, which hard to consider. Apple was not the stock that it was back here. But nonetheless, you very rarely get these opportunities in the market, especially on the big caps. And when the bull market really does come back, and I don't believe we're in a bull market right now, specifically looking at long-term viewpoints, but we need to be able to identify when that comes back. Very unlikely that we get these massive discount rates that we're getting right now. And we can also see the scale in which they're growing. So these are just things you have to understand and visualize when you're looking at it from a long-term viewpoint. And I think we get a little bit overzealous or over aggressive maybe when it comes to our bias in the market. And I'm guilty of it sometimes too, but that's why I always say, you need to start taking advantage of your losses and learning from them, because if you're not, then you're just gambling and losing money. So that's the viewpoint there. And giving you another visual, like Tesla, right? Tesla, you were at 414, you dropped all the way down to 102. When are you going to get these type of opportunities? Like Tesla specifically, you basically dropped 75% on the stock. Last time this happened was 2020, and you went straight parabolic. So just food for thought, visuals, things I'm looking at, and giving you maybe a better perspective on downside opportunity and what the market's doing from there. Now, when we start to dive into this whiteboard, I want to do a recap first, and then we'll move a little bit further. So when we look at the recap, I want to make things pretty clear. So one second, I'm going to throw this out of the way. It's right in the middle of everything, but whatever. We'll just let it be in the middle of everything. So a few things. When we look at what's happened and where we've been, what were we talking about the last time we went over the whiteboard? We talked about one of the biggest factors being unemployment, right? For a downside thesis on the market. Now, we're going to get to that. But so far, we've basically turned unemployment into a good thing with how the Fed talks about it, okay? And when I'm saying that, by that, do I believe unemployment needs to go up? I believe it does in order to really get inflation under control. But until then, we're treating unemployment as a tool or something that's helping keep the market afloat, if you will. And so they're basically saying, well, we're tightening, we're raising rates. But the good thing is unemployment is actually keeping the market strong while we're doing all this economic easing. And I'm just like, is it? Is it really? Because when we look at the data, you don't see the healthy numbers from inflation or economic tightening, sorry. You're not seeing all the the data kind of perform like we want it to, right? We're seeing demand drop, but inflation rates stay pretty high on most goods except energy. And so then we have to dive down a little bit more into what exactly is the Fed talking about and are they looking at. Now, this is something that, again, this has all been here since November if you've been here on the channel. So we've talked about PCE, PPI, CPI. And basically what did we say? If these data points continue to drop, the Fed will come out in a bullish sense, right? Because at least they're getting one or majority of the pie moving in the direction they want it to for once, right? Because if we look over the past year, these numbers were just going up. So we just had inflation going up, right? There was no consumer confidence was hypothetically there, but when you look at the gist of it, it wouldn't have maintained. And basically since November, you've been on this decline when you look at this data here, right? So they've all just been coming in down, down, down. So what's going on since then? Since the last time we heavily covered this, everything's really dropped, including unemployment, which we didn't really want to happen, and somehow it just continues and continues to drop. So that's probably the issue that's the biggest problem. Now, when we go back to what we expected with rates, we had a 50 point, a 25 point next. So 50 point we got in December, 25 point came in February. Most likely another 25 is to come. If they paused, that'd be really bullish, long, like shorter term for the market, okay? It would be. Now, the big question that people keep asking is, Tyler, where do you see that uptick happening, right? Because right now we're just dropping. The inflation numbers were just dropping. And it's unsustainable with the rate in which this is dropping, right? So if we really understand that, we're basically dropping 0.5% on CPI every single report that we have month over month. And that's not going to happen. We're not just going to get back to 2% core inflation and then be done, right? It's not just going to happen within a year. Very unlikely. Especially with unemployment staying where it's at. And unemployment, just so you know, I believe it's at 3.3%, which is extremely low. It was at 3.4, dropped down to 3.3, which is just crazy. So you need to understand. So unemployment is still dropping. Now, if we look at what's happening here, you're not going to just maintain this. And I will continue to say this. It will not happen. The biggest factor here for me is going to be energy. And what we've seen, people keep asking, like, hey, Tyler, can you go over the oil chart? And today it's good. It's a good time to do it if ever, right? So when we're looking at this energy chart, the big factor for me originally was if energy starts to spike, I believe CPI, PPI, PCE will start to rebound back to the upside. And we were getting a little bit of a bounce here. In December, we tried to bounce. Beginning of January, we dropped. And then we kind of came back up and came back down. Now, you were getting an ascending triangle, but what do we know? We know ascending triangles are continuation patterns. So how can we continue to the upside if we're just going down? Unlikely, right? Just like we had back here. So to give you a food for thought of something similar that has played out. And I'm not going to say that you're just going to drop from this. I'm going to tell you that right now. I don't think you're just going to drop into oblivion again. But this is the same kind of pattern that played out. So you're breaking, coming back down. High percent chance you test like the low 70s again, and we see what happens from there. But overall, oil still in a massive downtrend. Now, there's some big points that are changing in the market right now. Like we know China, heavy demand on energy. I believe Morgan Stanley and Goldman Sachs just came out and said energy most likely remains one of the most volatile aspects of the market for the next 2 to 3 years. So these are things we have to be viewing for. And so unless energy like just starts spiking like crazy, I don't think energy is going to be the black swan event that we probably thought it was going to be. It's not going to be that. So what is going to cause this issue? Now, for me, the question is going to be, what's probably going to happen is we're going to start to stagnate. Okay, so we're on this big drop. Let's say March is right here, going into April, give or take in this range, right? So we'll say March. Actually, you know what? I'm not going to hinder you guys with my writing on my mouse. We're just going to say M and A for March and April, okay? So that's this area right here. I anticipate inflation data starts to just stagnate. For me, that's what I have to anticipate. And when that happens, you'll probably see a just slowdown in the market like we expect when it comes to GDP and all other aspects. But the main question to me, and what can cause a drop on the market if you're going to get it. If you're going to get the drop on the market, which I can't believe inflation is going to be handled the way it is. So I have to anticipate a drop will come eventually. Okay. The only thing that is going to drop you, I'm going to be very clear about this. At this moment in time, it doesn't seem like it's going to be energy unless we get a massive spike on energy. It's going to be this right here, PCE, PPI, CPI. The second you see a rebound in data to the upside, so if you see CPI higher than expected ever, you will start to get some downside concerns. And then the concern will be after that is, what does the Fed say from that specifically? Like when we go back to this last Fed meeting, people were like, it wasn't nothing really being said. It was a lot. It was beautiful. It was great. It was fantastic. You had Powell come out and basically say the market's reacting the best that we could have hoped. We have, PPI, PCE, CPI all coming down. People are like, well, if the market's going up, could this hinder inflation? And he was like, that's not really our concern. We just have to be concerned with the data. And the market knows we're going to hold these rates here for a significant amount of time, most likely into 2024, maybe even mid 2024. So it seems like we're in this phase of, okay, if this is the worst that's going to happen, okay, it is what it is. So the question though, and the thing that I'm saying that could be that black swan, is if these data points start to rise back significantly. And that's what your focus has to be now, is watching these data pools and seeing what comes out. As long as they drop or come in as expected, I think you're fine, okay? I believe you're 100% fine. Now, there's a lot of underlying issues that are out there as far as China, what they're doing with the dollar, what's happening with the demand on energy. You're going to see, again, a lot of volatility there. But it won't be concerning on the market for me until this gets affected, which it probably does get affected. I'm like counting on it, to be honest. I've been watching, I've been waiting, and I'm just being patient. That's why, again, what do I keep saying every single day when we're trading? Be liquid, be liquid, be liquid. There's no real benefit unless you're in the money, which I have told everyone as well, beginning of January. If you're looking to swing, deep in the money positions are probably the way to go when it goes to options. I don't want to swing heavy out of the money contracts. That's not for me, unless it's in a sector that I really like semiconductors. So that's where I'm viewing that personally. So there's no reason for me to just be swinging for the fence and going for these crazy out of the money yet, because fundamentally we're not there yet. Okay. Now, when you do consider doing that, for me personally, when my mind will change on that, is when we are talking about cutting rates, which I think we have a long time for that to go. Because once you start cutting rates, I think you're going to start looking really good on the market. And again, I've seen everyone's charts like, well, when you cut rates, typically you pull back. Again, you're comparing totally different markets to each other, so you're just doing more harm than good. So that should be the focus. So again, let's talk about this. Going into the rates also of where we're at here. So right now we're at 4.75, where terminal rate is at with the 0.25 we just had. We're at 0.5 in December. Now 6 is like my cap. 6 is what I believe they will not go above. Like, let's say inflation starts to spike again, I still don't think they'll raise it above 6, because there's no real point. Because right now, the thing that's holding the market up or holding inflation from really dropping is unemployment and wages right now. Now, we've seen wage growth drop even though employment's gone up. So we've seen people getting jobs, but it seems like people are, like in tech, for instance, a lot of tech jobs you've seen, Google, Microsoft, etc. People, it seems like, are taking pay cuts, which is better than nothing. Okay, so we have to understand that also. So these are aspects that we like that are happening. So this is my, as high as we're going to go is 6. I really just don't even think we're going to get there, but that still leaves 5.25 hikes. So again, that's my opinion. I don't think they're going to come out with another 0.5 or 0.75. It just doesn't make sense unless we go through this area of the market just like shitting the bed, where we have to get this going. So that's my viewpoint, and that's what I'm watching there. Now, again, if you disagree, I would love to talk to you about it in the comments, but I'm not going to respond to like crazy comments, if that makes sense. So that's what I'm looking at there. So going into summer, I anticipate we have probably another 0.25, and I think they're going to try to slow it down after to flat, to not do anything else. At 5% personally, leave it at 5 on the terminal rate, and then kind of see what happens from data. Because what they want to see is what happens to the trend of inflation when they stop raising those rates. That's why I anticipate between April I shouldn't even said March through April. It should be a little bit further than April, to where you probably get some flatlining on the data pools there. And then you want to see what happens when you leave the rates flat and untouched. Because if you continue down from that, then you look really good. And then it seems like you have a real handle on inflation. Now, again, we're basically doing like, the for dummies version here, breaking it down really quick and trying to make it as understandable as possible. But this is what I'm viewing specifically on the market, like my dated viewpoint here. So people keep asking me like, when could we drop down? I'm telling you, it's all about this. If we see these inflation numbers pop back up, then you're concerned. But until then, I don't think Powell or anyone's going to change their tune, because everything that they have control of is happening right now. Okay. That's what we need to view. Also, the debt ceiling could be an issue, but that's only if we don't handle it, which I think they're going to handle it. So that's my viewpoint there, things I'm watching. Over the next few days and weeks, again, the biggest thing when it comes to indexes is previous highs, previous highs, previous highs. Like, we have our demand areas, but again, as we go into like the 4-hour chart, clearly just mounting previous highs over and over in an uptrend, it still looks great. So unless we start like really flipping 12.5 and pushing below like 12,000, I can't be a bear. That's just what I'm viewing though in the market. Going into something like SPY, giving you another visual here. I mean, SPY, you broke out of a massive level. I mean, you haven't been above for the 410 region since essentially, August. So that's something to think about. And if we look at that trend that we had in August, like, look at the time that it took to get to that place, right? If we look, you've bounced from basically January 1st all the way almost back to August highs. I mean, you're still 10 points off from our local highs to August highs, but food for thought, you're getting some really good movement. So this is good. And for people wondering, well, Tyler, we're getting some downside here. What's happening here? Again, like I always say, if you set a target and you hit the target, why do you have a target? Because you expect sellers or to be a struggle to get above that point. I'm okay with one day of potential downside. It's not that bad so far. But that's what I always say too. I posted it on Twitter. It was the tip of the week when it comes to day trading, wasn't it? It was, if you're looking at everything, react. Don't try to predict everything. I think predicting is cool. Have your levels marked on there, but you need to adapt and react. I can't say it's enough when we come to each trading day with the plan, but it never really matters. We have to be able to admit our plan was wrong and trade what the market gives us. And I can't say this enough, right? That's what comes back down to when I was bearish, right? We come back down. What did we say? We were following the Nasdaq heavy. What did we say about this level here down here, right? We said if we remount above 11.7 to 11.8, we cut our puts and we move into calls and we play the upside. And that's what happened. We pushed up, retested, and we just went bananas. So that's what we're looking at. That's the viewpoint that I have, and that's just the area of the market that I'm looking at right now. If you have questions, again, would love to answer them. Again, I'm not being biased. Again, I'm trying to say essentially as liquid as possible every single day. So again, I just come to the market, see what it gives me, like, we got some continuation, I'll trade the upside. And the upside right now has been far easier than trading any of the downside, just because it's been so clear to the upside. So again, that's what I'm viewing, and I'll have more charts coming out tomorrow on Twitter as well. Again, if you have questions, comment down below. I'll see you tomorrow.